Hello everyone, welcome back to the channel. Thank you for joining me here. This is a ByBit tutorial for beginners, helping you understand specific areas of opportunity within the actual platform itself. So what we're going to do is we're going to take a quick look at how to trade, kind of the basics. We're going to touch on how to set up the trade charts, as well as how to buy and sell. Kind of some simple yet basic features that I think are very important to know. More rudimentary, but also, building a foundation, a stable foundation is extremely important. Okay, so again, we're going to touch also on trading futures, derivatives, and take profit targets and stop losses. So everything you should need to know to be able to be an effective and more successful trader. If you want that for yourself, of course, do have a trading academy community and signal group. Link in the description below, CryptoCache.tech for that if you want. There's also some significant ByBit benefits for registering through my link in the description as well. This provides you with a trading competition benefit, pretty significant. We have those trading competitions frequently, and there's also a significant deposit rewards as well if that is something you're interested in. So be sure to check that out in your own time. All right, so let's go ahead and take a look now at the charts and just kind of help you understand, generally speaking, the first things first, foundational knowledge of spot exchange. Okay, so what does that look like? How does that work? It's pretty straightforward. When you log into your ByBit account, the first thing you're going to do to be able to access the charts spot trading initially is to point at trade up top, select spot trading, and then subsequently choose whichever trading pair corresponds with the amount that you have in your account. Now, we won't go into great detail here regarding that because this video is under the impression you've already transferred funds to your account or deposited some fiat, but at this point, we're going to use an example of USDT. So when we click on Bitcoin/USDT, this implies you have USDT in your account and you're trying to buy Bitcoin with it, okay? And furthermore, to kind of further that, so you kind of understand, generally speaking, on the left-hand side, what you're looking at here. You got the charts on the right and the ability to buy and sell on the far right-hand side. But on the left, you see the spot exchange option here where you can choose your trading pair. So just say, for example, you want to search for, Cosmos Atom. You type in ATOM, you choose the corresponding trading pair, and then you trade that. Keep in mind, these are all going to be default to USDT because we're under the USDT category. If you want to trade USDC, for example, you just simply select USDC first. Okay, so that's really as simple as it gets. You find your trading pair, and once you select your trading pair, it'll give you all these different options here to be able to trade that yourself. All right, so now that we've accessed spot exchange, we want to look next at the charts and how to set them up correctly. So let's go ahead and take a quick look at that and see what this entails. Now, it's going to be default, keep this in mind, to a standard chart itself. Okay, so first of all, we've got the standard trading view and depth chart. All serve a certain purpose, but the standard is kind of the basic charting tool that comes with the exchange itself, whereas trading view is a much more detailed, specific trading and charting program, if you will, built into the website, built into ByBit to essentially allow for you to add and remove specific indicators and to maximize your benefit. Now, I would recommend, of course, setting up your trading view the way that I like to trade. I have a link above here. I'll go ahead and pin it above so you can go ahead and reference that video to help understand specifically how to set it up your charts the way that I like to chart. Because if you've been watching my videos at all, you'll know I have a certain way of doing things, and ultimately the best way to do that is to have your own TradingView account and to use that separate from the exchange. I love ByBit, don't get me wrong, but I also love my own charting tools as well. Okay, so again, this is what it's going to look like by default when you click on TradingView. What we want to do is acknowledge a few things first. First things first, you've got different time frames up top here to signify the current market movement. Okay, this is the 1 minute chart. Obviously, if you're day trading, it might be more specific to you. We've got the hourly chart, which is one of my favorites, helping us understand roughly what's going on in the smaller time frame, which transitions to the 4 hour and the 1 day, etc. Okay, so each time frame will reflect a different amount of trading time. Okay, and what that basically just means is if we take a look at the 1 day, this is a full 24-hour candle. When this candlestick closes, that'll tell us what happened in a full 24-hour period. All right, so based on that being said, what we want to look at next, of course, is the actual indicators and how to add them. So simply put, just say you want to add an indicator, I'll just throw one out there, RSI, for example, Relative Strength Index. You type in RSI after clicking indicators, and you select Relative Strength Index. It'll give you the RSI for the daily chart. Now again, keep in mind when you select 4 hour, that will also translate to the 4 hour time frame. Every time frame has different information that you can interpret. Okay. Now I teach all this in my Trading Academy, much more specific in detail. If you're curious about that, link down below, CryptoCache.tech, if you want to consider that. However, we've had a lot of recent graduates do very well continuing in our community. But what I'm getting at is the fact that indicators as you add indicators, they're going to continue to add more content to your screen. So try not to get overwhelmed with too much at one time, but simply put, the best way to understand that is to essentially make sure that you find indicators that work best for you. And we all have different risk tolerance, and that's something you want to kind of consider. So back to setting up your chart here. Okay, so what I typically like to recommend in most cases is relative strength index, also moving average, convergence, divergence. Okay, now keep in mind I do have a video obviously to describe how to set these up specifically on your own TradingView chart, but that's generally how you do it. You click indicator, you type in the name of whatever indicator you want, and it pulls it on the chart. Okay, you can move things around the way that you like. The great thing about trading is it really helps you understand you can customize things the way that you want, and it's a very user-friendly environment. This all happens within TradingView. Okay, so just so you want to draw some lines in the chart. All right, you want to draw some trend lines. You click this line here and create one. If you want to do Fibonacci retracement, you can go ahead and select that and put up some Fibonacci retracement levels. Okay. Now again, I'm just kind of spitballing here. That's obviously not how you set that up. I have videos describing each one of these in their entirety. But for the moment, that is essentially what we're looking at and the most basic, simple way of setting up your charts within ByBit itself. So how to buy and sell cryptocurrency. Let's go ahead and take a look at that and help you understand, generally speaking, the simple yet fairly complex ways in which you can do this. All right, now we'll start with the basic. We're going to look at market orders and of course touch on limit orders and take profit and stop losses. But generally speaking, for the foundation here, market is the most easy to use, but it also is the most or least recommended. Okay, you have what is referred to as slippage. When you were to buy a market order, you're basically buying at the worst available price. Okay, so keep that in mind. You'll get filled instantly. It'll happen fast. It's a good thing to use in an emergency, but it may not be the priority that you'd want to have on every trade. Okay, so just keep that in mind. But before we get into that, let's go ahead and take a quick look at the order book here, so you can kind of see generally what this is. The red, fairly straightforward, is the sell orders that are occurring right now consistently. As you can see, the sell orders are always higher than the current price, and the buy orders are always lower because you want to buy at a lower price and or sell at a higher price to make a profit, right? So generally speaking, that's what we're looking at here. These are the bids, if you will, and these are the asks. There's always a bid-ask spread, and it's usually within a tight margin, at least with a largely traded coin like Bitcoin. That being said, the current price point is $28,239. So if you want to just say buy in right at that level, you would put in $100, or again, just an example, whatever amount you want to spend in USDT. This is your trading pair, and you would effectively click buy Bitcoin, or you would scroll this over here to reflect the amount of available funds. So just say you have $1,000 in your account, you scroll it over to 25%, it'll give you a value of $250. Okay. Then once you hit buy Bitcoin, it'll instantly buy the order and you'll get filled at a higher price point than the current price itself. Okay, so it should be somewhere in the range of, just say, for example, if the price is at $28,238, it'd probably be at $28,250 is where you'd get filled. Okay, it's referred to as slippage. I cover that in all of my Trading Academy videos, but generally speaking, it's an important thing to note that market orders should only be used sparingly because you'll pay higher fees as well, especially if you're using leverage, which we will touch on here in a moment. So let's go ahead and take a look now at limit orders and help you understand, generally speaking, what that might look like, the positives and negatives potentially for this type of trading. Now, we've already prefaced here that market orders include slippage, you can pay a higher rate, and generally speaking, you don't get filled at the price point you want. So I'd say there's more negatives for market orders than there are positives, but that's just me personally. Again, quick in, quick out, it's good, it serves its purpose. Limit orders, you should consider using this more frequently, based on the simple fact that it is a very consistent way of trading. It's probably the best way to avoid paying more than you need to. And especially if you transition over to futures or derivatives, you're essentially going to be paying a lot more on slippage if you use market orders. Okay, so again, I would say limit orders is the best way to go. That being said, how does limit orders work? How do they work on ByBit? Well, it's fairly straightforward. What's kind of nice about this is we can see here the order book we've already been looking at. We've got a current order price and we've got a quantity. Okay, now keep in mind, market orders are a little different. They provide us with an order value. You simply put how much you want to spend, that's it. With a limit order, you kind of got to think a little different here, whereas, where do I want to try to get in? That's essentially your goal. So when you're trying to buy, you're probably going to put a price point lower than the current price right now, because why spend more than you need to? For a sell order, you're going to probably try to sell higher, of course, to make more profit, right? That's the concept. So in this case here, why don't we just go for an example here, 28,000 even. So hypothetically, the price comes down to 28,000, we will get filled. When we submit this order though, keep in mind, it's just going to put it in the order book like you see here, and it won't get filled until the price comes down to that level. That being said, we take a look at the quantity here, leave that alone. What you typically want to do is use the slider bar here and do a percentage and or designate an order value. Okay, so some people want to use just say 25% of their portfolio. Okay, other instances you would probably just put in a dollar value. And what's nice is if you slide that bar, it'll give you an average amount of how much it is in your portfolio. So just say, for example, we want to spend $5 on Bitcoin. It automatically quantitates that to 20%, which is of course 20% of 25. Right. So in this example, we have a $25 portfolio. We're looking to buy $5 worth of Bitcoin. And if we're to buy Bitcoin right now, it'll provide us with confirmation. Okay, so take a look here. We click on buy Bitcoin. What it does, it shows here at 28,000, we're trying to buy 0.00178 Bitcoin worth $5 USD. Okay, so we go ahead and hit buy Bitcoin. What it'll do is it'll put it automatically down here under current orders, limit and market orders. Okay, now so it tells us it's a limit buy order, and the value is 4.984. Keep in mind that does include the cost of trading. Okay, so keep in mind there is a tiny amount of fees associated with that, based on obviously the spot or derivatives account you're using. That being said, though, we can cancel this at any time, but if the price comes down to 28,000 even, this order will get filled. Okay, so the positives of a limit order is that you can essentially be able to do whatever you want when you want as far as specific price points that you'd like to get in or get out. But there is a thing referred to as missing out, right? Fear of missing out, which could occur if the price keeps going up and you're trying to buy at a lower price. Okay, so again, slightly double-edged sword. That's how trading is in general. But I think you have more control with a limit order, and it's the best way to trade in general, just based on that simple sentiment. That being said, the very last thing I want to touch on here is how to cancel that order. Just say, for example, you make a mistake or you want to try to adjust that price point. You simply click cancel down here on the limit and market order section, and success. All of your assets are put back into your account effectively or no longer in holding, and it comes through here to essentially show that you have successfully canceled that trade. So let's go ahead and take a quick look at take profit and stop loss orders, just so you can kind of see what that looks like. This is, again, fairly basic. It just takes one extra little step and kind of helps you understand, generally speaking, that you can step away and not worry too much about reading the charts the whole time. What I mean by that is instead of just doing a market order and buying in a specific value or doing a limit order, choosing a specific value and how much you want to take that trade with, you're going to do those two things as well. Only you're going to add a third layer essentially, which is built in here, a trigger price. And what a trigger price is basically just telling you that once you hit that specific price point that you're shooting for, it'll execute a take profit order essentially and close your position. So simply put, let's go ahead and give you an example here. Let's go ahead and put in 27,500. Because again, I'm not trying to get filled in this example. I want you to see what it looks like in the order book there, is to essentially be able to understand what this should look like on a normal day-to-day basis. Okay, so when you choose order price 27,500, you can see that's the price and point in which we want to get in. So that's below the current price, so we get a better price point essentially. So if you were expecting the price to come down a few hundred, then you would put in a lower price point like that. For the trigger price, this is the point in which we want it to trigger a stop loss or a take profit. Essentially the same thing, because if you're stopping at that point, you're closing your position and you're taking profit. We're going to choose 28,500 just for the sake of this example here. So we're right in the middle of this, of course, so the price action would come down to 27,500, we'd get filled, and when it comes back up to 28,500, it would automatically sell. That's essentially what it's telling us here. So we put in $5 as an example here, just to kind of keep that consistent. You click buy Bitcoin, and what you'll see here is the same confirmation page. You're going to confirm all the factors are correct. You're going to choose buy Bitcoin, and what it'll do is it'll go ahead and submit the order, essentially putting it in the order books here, effectively allowing us to take a limit order at 27,500. Now keep in mind your screen might be default to limit and market orders. You will have to select take profit stop loss order here, and you can see everything in here right there as an untriggered target. Okay, so once you enter your order and the trigger price is taken or hit essentially, then it'll automatically trigger that closure. Okay, that's how simple it is. Fairly straightforward. A good feature to use with my trading bots, automated trading bots within our community. We always consistently use trailing take profit targets, and of course target specific take profit stop losses as well. So there's a lot of little things you can build into your trades, but this gives you that extra layer of security, knowing that, hey, instead of having to watch the market and sit there all day and log in and hit sell when you want, this will sell it for you automatically when the target is triggered. Okay, that is essentially how simple it is. And one last thing, of course, as per usual, you click cancel and it'll cancel that. It'll return your funds essentially and ensure that you have that full amount available in your account. All right, so let's go ahead and take a look now at derivatives, which is essentially another word for futures. There's a lot of different options within the derivatives field, but generally speaking, I want to kind of give you the basics there and help you understand how to utilize that effectively. Choose Bitcoin, USDT first, okay? And what this really is going to be very similar to before. Only difference is it looks slightly different. We don't have the trading pair on the side there. While you can still choose your trading pair, it's not kind of automatically built in. We have our charts, our order books, and of course our orders here. So pretty much the same concept here applies for this. The difference is you have different trading types. Okay, so to start with that, first of all, let's just go ahead and understand what margin modes are. Okay, so you have cross leverage and isolated leverage. It's recommended at first if you are brand new to trading and you're going to use isolated margin, you recommend using isolated first because what it does is it takes only the specific amount for that trade and uses that only. Whereas cross margin, which can be beneficial in some cases, will take from your overall portfolio size and keep adding to your position to save the position. Okay, so it's a slippery slope using cross trading. If you're more of an advanced trader, might recommend that. But generally speaking, isolated would probably be a good point. And if you want to read these here, kind of give you specifics, that'll kind of help explain it for you. But the easiest way to understand is that isolated and cross margin are two different things. And isolated might be a good starting point if you're going to insist on using leverage. Down below, we have the leverage amount, okay? So this really just increases the risk size, right? So if you do leverage 10x, you're increasing the risk by 10 times, okay? That's the best way to understand it because while you have 10 times the benefit, you have 10 times the loss potential, okay? It's important to recognize that. But that's kind of how you do it. You can kind of use a slider bar if you want. You can put in a specific number. So say you're lucky number 7, you can use 7x leverage and confirm. So for the sake of this example, we're just going to keep it at 10 here and just leave it there and then say confirm when you're ready. Okay, so we've got it set up for a 10x leverage essentially for an isolated trade. Okay, that's generally where we're at there. Now taking a look, of course, at the calculator, this is also important because I need you to understand liquidation prices. So let's just say, for example, you are going to take a long position at 10x, as we've kind of exampled here so far. You want to buy 1 Bitcoin, and your entry price is 28,000. If you do that trade right now with your current scenario, what this would do is you would have a liquidation price at 25,340. So in order for you to lose your entire trade, in this example, 25,340 would effectively be the liquidation price. Okay. Now, if you choose cross margin, it's going to change things a little bit because of the simple fact that it'll use your overall portfolio size. So just say in this example, you have a $10,000 balance and you do the same exact trade, you'll be liquidated fully. Your entire account will be zeroed out at $27,173. Okay, so again, maybe not the best consideration there to start. Isolated margins give you a lot more leverage potential or a lot more room for growth. While the gain isn't as significant in some cases, it's still going to be beneficial for you in the overall sense of things. So please understand, I recommend isolated over cross margin until you get your feet significantly wet. That being said, that's kind of what we're looking at here in the overall sense of things. We take that same scenario to say it's 10x, and you got in at 28,000. Correction, sorry, not 20,000 Bitcoin, 1 Bitcoin, 28,000 is entry price. Then what you're going to be looking at, if you just say you got it out at 29,000, it gives you a 35% return or a 3.5% traditional profit and loss ratio. Okay, so again, that's essentially what 10x leverage will do for you. You'll get a significant gain if you hit your target, but you'll get a significant loss too, and your full account, or just say the trade itself, can be liquidated at specific price points based on how much you leverage. The more risk you provide, the closer that liquidation price is, and the worse experience you're going to have, generally speaking. You'll get away with a couple here and there, but for the most part, the house always wins, and it's important for you to make sure that you minimize your loss by looking at these things first. So I just think it's important to kind of recognize that that's essentially how that works with leverage. The very last thing to touch on will be the funding rate here, and this just kind of tells you that, based on the direction the price is heading, you'll pay either more or less for trading fees. Okay, so for right now, with it being positive, and you were to just say short into this, you'll pay more in fees than you would be if you were to long, because there's more short positions in the order books right now than the other way around. Okay, so again, you don't necessarily need to remember that too much, but just keep in mind once every 8 hours this does reset, and it's one of those things that's going to impact you. So if you're to, again, look back at our previous examples, use limit orders for futures almost every single time unless you have to get in or out quickly. The reason why is because if you get out as a market order, you're going to have extreme slippage and you're going to pay more in those trading fees because of that. Okay, those are all little things that factor in, important to note moving forward. All right, so the very last thing we're going to cover here, of course, is some bonus content, just help you understand a little bit more about what ByBit has to offer. They have a lot of other features that I think are very important for you to recognize. The first thing you want to make sure to do, of course, is to use the link down below to register so you can be eligible for not only some significant deposit rewards through my link, but also more importantly, we have consistent trading competitions through ByBit. And it's really awesome to be able to be part of that with not only my community, but also my subscribers. So be sure to check that out in your own time. Really awesome stuff, link down below, and or of course, through the webpage here if you'd like to decide to become part of our community. So taking a look at some of the additional features. The very last thing I want to kind of touch on here, and the things you want to be familiar with, first of all, is copy trading. You're going to find copy trading under derivatives. It's going to look exactly like your traditional account. But it'll give you just a small amount balance of just kind of 1 or 2 Bitcoin to kind of trade with and learn from that. That to me is probably the most important thing you could do. If you're going to take anything away from this video, minus the instruction, is to use copy trading first. Okay, before you lose your own money, lose fake money. It just makes a lot more sense. Okay. Furthermore, as well, if you're not interested in that and you want to just say copy other traders, there's nothing wrong with that per se, to be selective, of course. In fact, I get asked all the time to be a copy trader for ByBit. I still have yet to consider that, but if you see here, there are different ones that you can kind of follow that are making strong, significant returns, and you can essentially allocate a specific amount of your portfolio to essentially follow them. Okay, so it's basically copy trading. I'll make a video regarding this here soon. It should likely be in the link up above here momentarily. That being said, the last thing I would say too is also very beneficial is trading bot. Trading bots are nice. I use them all the time. Not specifically these. I have my own trading bots course that we've created and we have in our community through Cornix to essentially allow for us to automatically, fully automate our trades, where I send out signals for our community, and it's a really awesome experience. It's kind of hands-off, if you will. You can follow those as well if you're interested. We do have a free trial link down below. What I'm getting at here, though, is the spot trading grid bot. This is nice because what it does allow for you to dollar cost average and different features here. I prefer the DCA bot myself personally, just so you can keep adding to your position as the price goes either up or down. There's different strategies, but it's really nice to be able to have this feature here built in, so you can kind of almost go on autopilot and not have to worry about logging in every single day. It's kind of like a savings account, okay? Again, really cool stuff there. I won't go into detail here just yet. There's more features to come, obviously we're going to kind of cover this here in the near future, but I just want to kind of let you know there's more stuff here than meets the eye to ByBit versus other exchanges. So to me, ByBit is a very, very good exchange. Definitely recommend using it. And obviously, again, you want to become part of our community and consider, being just part of something bigger. CryptoCache.tech is a site linked down below. But this is all we have here for our tutorial. Thank you so much for watching. We'll look forward to seeing you all in the next video. Hope you have a great rest of your day. Take care.